Today we will discuss unrelated business income tax. Watch until the end and make sure you like and subscribe. UBIT, unrelated business income tax. It's a four-letter abbreviation, four-letter word. It shouldn't actually be all that scary for nonprofits. Unrelated business income tax is income that charities have that is not related to their tax-exempt purpose, and they have to pay tax on that income, and it's tax on the net income. And they're allowed to have up to 20 to 30% of their revenues come from unrelated business income. And then taxes are paid. So the first question is this business activity, is this related or unrelated to the tax-exempt purpose of the organization? There's a series of tests related to that, several definitions, several exclusions and modifications to the definitions. But ultimately, this is where the rubber meets the road most of the time. Most of the time, the activity contemplated is, in fact, a business. So it's really the question of relatedness. Is this related to the exempt purpose? Does it further the exempt purpose some sort of way? If so, then it's typically related. Like I said, there are lots of legal definitions to go through here, as well as tax definitions. As I said, about 20 to 30% of a charity's income can come from unrelated business income activities. If they get to that size, that doesn't mean we stop, because frankly, if the charity created a business that is just going gangbusters, what we would typically want to do is create a subsidiary organization, drop the business down into that, and then ultimately the net profits from that activity can be distributed back to the charity. And that's actually a form of investment income. Remember on one of the early slides, the pie chart, the top left was 8.8% investment income. So it might be that if your program service revenue is unrelated to your tax-exempt purpose and it's growing because you're a successful business person, we might want to drop that down into a subsidiary and then pass dividends back to your organization. So what you see is this can-do attitude, and when there's a will, there's a way. We'll find a way to help you do this in a permissible fashion. What's the risk? Way too much business income can ultimately result in the revocation of your tax-exempt purpose, tax exemption rather. But typically it's just taxation, administrative burden associated with that. Like I said, we can drop it down into a subsidiary to mitigate the risk. We've already talked about some of the moving company examples a few slides ago with halfway house sort of day release program situation. But in this instance, we had to really do what's called silo and really disaggregate the activities. We had to dive in and figure out which of these activities are directly related to your tax-exempt purpose, which of these activities are not, and at what point do we drop these activities down into a subsidiary. So for example, the moving services became so successful that they started to have to hire individuals who were not a part of the criminal justice system and didn't really have relation to the criminal justice system. Like, okay, well, then you had whole trucks, whole moving teams that were not related to the criminal justice system in any way. And at this point, then, this is just a charity running a business. So we really then had to start figuring out, okay, at what point do we roll this down into a subsidiary or an affiliate entity that's perhaps part owned by one of the nonprofit officers, perhaps the executive director or CEO. These types of relationships are permissible, and we just have to follow the conflict of interest policy and make sure that the independent decision makers on the board are made aware of the facts, material facts. They approve of the transaction or the series of transactions. It's commercially reasonable for the nonprofit to engage in these activities. But if we can align the nonprofit's leaders' interests, personal financial interests, and the nonprofit's interests, then that could be a win-win type of situation. So just know that these examples can grow and grow and grow. Thank you for watching. For more information, watch our other videos or go to charitableallies.org.